So does 7.2% CPI look like the peak to you, Nick? And is there a downside risk associated with that number now from here on in?
We do think we're going to get 7+%, somewhere in that low 7% for most of this year, and that will fall below 7% for at the end of this year. The weather impacts are going to be pushing up sort of fresh produce prices in the short term, the price of home durables as well that need to be replaced, and we think it's a slow grind. We don't actually see inflation getting back below 3% until, say, 2024, late 2024 at the earliest, and probably early 2025. So the issue in New Zealand is inflation has been surprisingly sticky, having been one of the first countries to see inflation pressures also start to pick up quite noticeably.
So, Nick, I mean, here's the thing. If it's going to be a slow grind for price pressures to come down, one thing that could offset that is what happens on the net migration front. I mean, New Zealand ends up as one of these very open economies, which is very fluid in terms of labor. I know you think that net migration inflows could actually pick up more or faster or more strongly than expected. Why so? Is this partly as a result of, I don't know, China's sudden reopening back in December or other factors?
Well, there were some question marks last year about when we opened up our borders in the first half of the year, just how quickly we'd see people coming back into New Zealand, and fears that people would leave and go on long-term overseas trips, having not been able to for a few years. What we have seen is that, in actual fact, there has been surprisingly strong interest in people migrating sort of long-term to New Zealand, and the outflow hasn't been quite as bad as initially estimated as well. And this labour market story is going to be important, because one of the key things that's likely to hold inflation up over the longer term, or has the potential to, is wage-related inflation. So if we do see immigration continue to pick up quite sharply and boost the labour supply, it's going to take the tension out of the labour market a bit quicker. So that may not stop the Reserve Bank from make the Reserve Bank go on hold in the short term, but it was likely to have quite an influence on when the Reserve Bank does start to cut interest rates. And we do think the Reserve Bank will cut interest rates in the first half of next year, which is certainly earlier than what the Reserve Bank's recent forecasts suggest.